Hello again guys. Right, I haven't made a gold chart for a while, and I haven't made a video for a while, so I thought I'd just put this one up here. And really the theme of this is just put the lines on the charts and then watch what happens. It's the easiest way to learn. It's the easiest way to be probably astounded by the way price reacts to the highs and lows of candles and these reversals. And if you're astounded, you'll probably get addicted like I did, and then you'll probably develop a way of trading it like I did. So this gold chart, just looking at this chart here, literally I just opened it to see what was going on. First thing I could see was we'd had a break up, what I call a bust up, pull back, and then a break and close through the high of the what I call the bust candle. If we clear all these levels off here and just draw some lines on here on a clean chart for you, excuse me, what we can see here is we've had we've tested the R2. I know the chart may look a bit messy to people that aren't familiar with it, but all we've got is something called the FXI pivots there. Just Google it or search on Forex Factory and you can download that. FXI space pivots. Then you've got the sweet spot gold, just giving me the levels. On gold I choose 250, that's 250 and that's 500, so that's 50 levels and the 25 levels if you like. And then we can start to draw some lines on our charts. Well, we hit that level up there, we reverse down, we could put the low of the 3 candle reversal there. In fact, it's that red candle there. If you're not sure because you're new to what I do, then please watch the playlists. It has all the categories, 3 candle reversals and how I draw my lines and so on and so forth in there, and other stuff, the RSI histo alert, and so on and so forth, how to use it. Again, that's a Forex Factory free indie, so everything you've got on here is free. Back to the reversal levels now. Obviously that was the green level support was broken and closed below there, which meant we should have been looking potentially for shorts, but you can clearly see the swing trend is long, so we're waiting for longs. Now we have to categorically reverse back against that reversal down to cancel it out on the 15-minute. So the high of that candle there, high, low, lower, high, lower, low. So a close through that level would mean we want to be looking for reversals. Then in order to find out where we may have a problem or what we can use as a target, all we have to do is use your next time frame and draw your levels in. The reversal level to the downside technically was over here because this is a higher high and this is a lower high than that, but for argument's sake we'll just use this low high high low high high. So we can put the 30 level on there, and then to the long side it is this is the penultimate candle, high low lower high lower low. So that would have been our reversal level to the long side. Then while we're here we might as well put the H1 on as well, which is the high of that red candle there. The reason we'd put that on there is because if we want to go long after the 30-minute has closed up, which it hasn't yet, then we'd need to close above that. I hope you're following me. So because that would be resistance above the price, the H1 high I'm talking about, it'd be sensible now with the R1 up there to close above that too if you wanted to continue long. Then wait for the pullbacks, as I always say, then continue long using the lower time frames to enter your trade in exactly the same way I have analysed this. I realise I'm talking a bit fast, and someone asked me a while back to talk slower, but I forgot, and you'll just have to pause it and rewind, pause and replay if you want to follow this precisely. So M15 reversal, back onto the M15 chart. That was our signal to potentially go long. In fact, it was that candle there that closed above the yellow line there, the M15 high, 1775.53. Close above it meant longs were back on, and as you can see, there's the 3 candle reversal I talked about. There's the RSI break and close, bust up, pull back, break and close. Look what it hit to the pip, the M30 high. If it wants to go any higher than that M15, it has to get through that, so that's why that is a potentially good target. When you're using these things as targets, I suggest you use some sort of support level ahead of you, because it doesn't have to go any higher than this. The support will always potentially act as resistance. And as you can see from this, if you use this flip area here, it's a significant level. Here, 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 here. I'm talking about the wicks. And look what we've got. Still wicks here. So this line here, for whatever reason, 17712 is massively important. And that's why when I say I always take my targets a little bit shy of what seems to be the obvious level to go for, that's why I do it. I've been caught out so many times. So look for these areas of confluence, if you like, something that has affected price numerous times. I mean, price has hit this and used this level 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 times out of all these things. You know, 11 times that's price has pushed up, pushed back down, pushed up, pushed back down. Hit it, push back down, hit it again, push back down, tried to close through it, failed, push back up, tried again, failed, push back up, bounced off of it, pushed back down, used it again. I mean, that's crazy, and you can only learn that sort of stuff by watching candlestick analysis bar by bar. So when we were down here at the 15, we had a good idea it would go up and test that M30 high. We also had a good idea from drawing our confluence levels, if you like, that it was going to cause a problem at that level, and lo and behold, it's repelled the price again. It's not a coincidence for watching, and have a good Monday.